Did you know that banks don't actually lend money in the way they think they do? In fact, they create credit out of thin air, and they don't always need to verify your income to do it. Today, I'll show you how to challenge loan denials using powerful legal loopholes like Regulation Z, 3-104, 15 U.S.C. 1691, and even 12 U.S.C. 1431, which proves banks extend credit without needing income verification. And in certain cases, even if you've been denied for a loan unfairly, this knowledge is what you need to hear. Welcome back to the channel, where I show you how to legally leverage the financial system to your advantage. If you're tired of banks denying your applications for income verification reasons, let's break down the laws that prove that you can fight back. Number one, get straight into it. All right. Banks extend credit without lending their own money, according to 12 U.S.C. 1431 and 12 U.S.C. 1813. Okay. But before we talk about challenging denials, you need to understand how banks operate. And most people think banks lend money that belongs to depositors, but that's not how it works. Okay. You think that they're loaning money that was put in the bank from other people, and that is not the case. Okay. So real quick, man, let me go ahead and pull up 12 U.S.C. 1431. I get comments all the time, people misinterpreting this section here, but I'm about to go ahead and just break it down real quick. Now, 12 U.S.C. 1431 expresses the powers and duties of the banks. So when Congress says that this is the powers and duties of the banks, this is literally this is the only power, and this is their duty. Okay. So it says each federal home loan bank shall have power subject to the rules and regulations prescribed by the director to borrow and give securities. Okay. Therefore, and to pay interest thereon, to issue debentures, bonds, and other obligations upon such terms and conditions as the director may approve. Okay. And to do all things necessary for carrying out the provisions of this chapter and all things incident thereto. Okay. There's more information here. You can go ahead and read it yourself. But the whole point that I want to stress is that this law essentially says that federal home loan banks have the power to extend credit to financial institutions. Okay. Federal home loan banks, could be the Federal Reserve in this case. And they do this by providing advances, basically, giving a loan to the banks. But there's a catch. These loans are often given without requiring traditional proof of income from the borrower. So understand that you don't need to provide a proof of income in order to, get a loan. So if banks can receive loans without verifying their income, why do they demand it from you? And essentially, this is something that you can use to challenge banks, because in modern money mechanics, they pretty much give the Federal Reserve a promise to pay, and the Federal Reserve gives them money. So why wouldn't they do the same thing for you? Okay, let's go straight into 12 U.S.C. 1831 and talk about what the definition of deposit is. Okay, it says the term deposit means the unpaid balance of money or its equivalent received or held by a bank or savings association in the usual course of business, and for which it has given or is obligated to give credit, either conditionally or unconditionally, to a commercial, checking, savings, time, or thrift account, or which is evidenced by a certificate of deposit, thrift certificate, investment certificate, certificate of indebtedness, and other similar names, or a check or draft drawn against a deposit account and certified by the bank or savings association, or a letter of credit, or a traveler's check. Okay, that without limiting the generality of the term money or its equivalent in any such account or instrument must be regarded as evidencing the receipts of the equivalent of money when credit or issued in exchange for banks or drafts, or for a promissory note upon which a person obtaining any such credit or instrument is primarily or secondarily liable for a charge against the deposit account, or in a settlement of checks, drafts, and other instruments forwarded to such banks or savings associations. Okay, that was a mouthful, got a little tongue-tied. But just to break this down, man, and really just to unpack that, when you deposit money into a bank, you're not actually putting cash in a vault. All right. Instead, your deposit becomes more of a liability on the bank's balance. All right. So banks don't lend cash. They just create new credit based on bookkeeping entries. All right. This means that they extend loans without directly lending their own money. So if banks don't need money to issue loans, why are they acting like they do when they ask for income verification? This is when they start to use false and misleading information to manipulate you. All right. This is why it's important for you to understand these laws, understand these definitions, understanding the terms of the banks so that they cannot sit here and tell you, oh, yes, we're trying to loan you money, so we need to know if you're credit worthy. So again, back to the fact that the banks are not lending their own money. When they go and acquire loans from the Federal Reserve Bank, they are not required for income verification. If they are able to receive loans without verifying their income, and they can give promissory notes or promise to pays or IOUs to the Federal Reserve, why can't we? And if banks don't need real money to issue loans, why are you acting like you are actually loaning? And then on top of that saying, hey, I need you to verify your income in order to prove that I should loan you money. Okay. Now we can further challenge them, and we can further connect the dots by talking about how the fact that using 12 USC 1831N, and essentially which this, not to read all of this, breaks down or outlines the accounting standards for financial institutions. What it really reveals is this: banks do not lend money in a traditional sense. Instead, they create credit using nothing but bookkeeping entries. Dig me? And every time you get a loan, the bank isn't handing you cash from a vault. They're simply typing numbers into a computer, and that's why income verification isn't always necessary, because they are creating credit, not lending hard assets. See, when you apply for something, according to this here, they are just typing in numbers, okay? They're not actually giving you hard cash, all right? And so if you wanted to learn more about the accounting aspects and essentially like what they are doing, you will get it in 18 USC 31N, okay? It's a mouthful of things that I don't want to just read to you guys. Some of you guys have told me, hey, don't just read the stuff, but actually explain what it means. I would suggest you go and read it yourself and gain more clarity, and also at the same time understand and try to learn from this information here, okay? Now, diving into how to challenge loan denials using the legal frameworks. All right. Now that you kind of understand how banks truly operate, let's just talk about how to challenge those loan denials or income verification reasons. When a bank tries to verify your income or tries to say, hey, you need to provide proof of income and this, that, and the third, documents of some sort, when they don't need to do that. Before I dive into some of the things that you can ask them for, but you can always request a written copy of the lender's underwriting guidelines. And if they cannot prove in writing that income verification is required, you can dispute their decision. So, for example, ask them for the legal basis of requiring income verification, saying, hey, can you tell me the law that essentially proves that I'm supposed to give you income? Can you cite that exact law? Okay. Most banks have internal policies, but these policies are not law. You don't have to abide by their policies. Policies are only for people who are employees of that said company. And if they cannot provide written proof that income verification is necessary, you have a room to challenge them on their denial. Okay. When you think of policies, it's like walking into a Walmart and they tell you you have to make sure you wear a vest as a customer. But if you're a customer spending money in there, then why would you need to wear a vest? See, that policy is only for the employees of the company. And if you're telling me, hey, I need to wear a vest, then essentially you should be paying me, right? On the other foot, back in the day when it was 2020 during the pandemic, and this is why I was able to learn more about the difference in policies and how companies can use this to how you can use the same understanding and the same laws against them in certain cases when they wanted to have some type of mask mandate. Hey, when you come in my establishment, you need to wear a mask. Well, then you'll say, well, I don't want to wear a mask. Well, it's policy in order for you to wear a mask. Okay, bet. So if it's policy, then I can be able to get a check from you guys, because policies are only to the employee of the company. All right. Your employees need a mask, not me. Dig me? Now, understanding this, all right, that you have a right to ask them for the written copy, and you can ask them to prove that very law that provides that. You want to be able to how you're able to ask them this stuff is based off of Regulation Z, 12 CFR 226. Okay, this is the entire Truth in Lending Act, and essentially you can ask a company based off the Truth in Lending Act, hey, can you provide the proper disclosures or the written information that proves what you are saying? Because the truth in lending is literally what it says, the truth in lending. So you have to give me the truth. Okay? And I put this entire section here because obviously this is all the information about lending. Okay? It talks about open-ended, close-ended, general information about the Truth in Lending Act. Okay? Special rules and things in that nature, clauses and forms and disclosures. Things in that nature that, again, it's all here. And if you are lending, then you should understand these laws. I shouldn't have to teach you, or I shouldn't have to prove that I don't need income. My proof is me asking you for the proof and you telling me that by law I'm supposed to provide income. You dig me? So essentially, when a loaner denies you, ask them that specific law. Hey, tell me the law that says that I'm supposed to provide income. And if you tell me a law that has nothing to do with you as a federal bank, okay, then you'll be violating my rights criminally, okay? If you openly and willingly lied to me about something, 15 U.S.C. 1611. You dig me? So it says 15 U.S.C. 1611, criminal liability for willful and knowing violation. All right. Whoever willingly and knowingly gives false or inaccurate information or fails to provide information in which he is required to disclose under the provision of this subchapter, uses any chart or table organized by the Bureau under Section 1606 of this title in such a manner as to consistently understate the annual percentage rate, otherwise fails to comply with any requirements imposed under this subchapter, shall be fined not more than $5,000 or imprisoned. You dig me? So essentially, if you lie to me, if some agent gets on the phone and says some type of lie to you, if you were to get on the phone with the underwriter who understands these laws and knows the consequences of knowingly and willingly lying to you, then they won't lie to you. All right? And this goes for any loan. Okay? But let's just stick to the collateral loans, the secured loans. Okay? Now, another law I want to talk about is UCC 3-104, which talks and gives you the definition of a legal instrument. Okay. Now, like I said before, banks go to their bank and give them a promissory note. They give them a negotiable instrument, which means an unconditional promise or order to pay a fixed amount of money with or without interest or other charges described in the promise or order of. Okay. So just to make this make sense, the negotiable instrument can also be considered a dollar. Your dollar is a promise to pay note. Okay, it's fiat money. All right, it's a discharge dollar. Dig me? That was given to you. This is what the Federal Reserve gave to the United States, gave to the bank. Okay, so the banks goes and they exchange your promissory note, your unconditional offer, your unconditional promise with the bank, and use that as a negotiable instrument to be able to acquire the money. Okay? A promissory note is legally considered a negotiable instrument. So if you give a negotiable instrument and essentially this is your proof of income. This means you can offer a personal or business promissory note as an alternative to income verification. Hey, if you want my income, I'll just sign a promissory note for you. Banks are to create money using the accounting tricks that I just talked about, using and typing in entries. So why can't you leverage this to your advantage? Understanding that negotiable instruments are put in place because there is no real money. And banks are not asking for real money from the Federal Reserve. They're asking for the opportunity to create credit. All right. And I've said in previous videos that there is an unlimited amount of credit that they can create. This is why I tell people to go ahead and get the no doc loans. All right. Negotiable instruments such as the 1099. If you prove a certificate of indebtedness, this is something else that you can use as a security instrument. Okay. Another law I want to talk about is the Equal Credit Opportunity Act, 15 U.S.C. 1691, which essentially says that it shall be unlawful for any creditor to discriminate against any applicant with respect to any aspect of a credit transaction. Just as simple, it says to discriminate against any applicant with respect to any aspect of a credit transaction. Now, again, they can have policies and things in that nature, but they cannot discriminate against anybody for any loan. They say, oh, well, I'm different. You know, this loan is completely different. This, the third. Well, does it fall under the Truth in Lending Act? Yes. Okay. So it is considered consumer credit. You got to ask them these questions and ask them to provide written documentation. So if they do provide written documentation saying that what you're saying is a lie or fraudulent, or they give you false information written documentation wise, you can use this against them. Or if they don't provide it, you can use it against them. It says on the basis of race, color, religion, national origin, sex or marital status or age. Because all or part of the application's income derives from any public assistance program, or because the applicant has in good faith exercised any right under this chapter. Under this law, lenders cannot deny you for credit unfairly. And if they do, you can request a statement of reasons under 15 U.S.C. 1691D and demand a legitimate explanation. And if they can't justify their reasonings, you may have grounds to dispute their decision. Okay? Within 30 days. All right? You can challenge them, and they must provide written notification. And if they don't provide that notification, the applicant has a right to a statement of reasons within 30 days after the receipt of the creditor, and they're supposed to disclose that they have denied you. Okay? So again, given the fact that if they try to say that, hey, look, you don't have income. Well, you don't have income. All right. How did you actually get the income or the money to loan to me in the first place? And if there is accounting that you're doing, why are you denying me when all you have to do is type in some numbers? You're not giving me actual money. So carry out your fiduciary duty and actually prove me. Okay. Now, you can't just go and scream all these laws to them, you know, and expect to get an immediate decision. You have to ask them for the written documentation. You have to ask them for those underwriting guidelines. You have to ask them to provide the written documentation that, you know, that proves the law that requires the income verification. You have to ask them for proof that your negotiable instrument doesn't work in written form. You have to ask them to justify their reasons. And you have a right to ask them anything in regards to your loan. All right. Now, this is why no doc loans exist. All right. The reason no doc loans exist is because banks know they don't actually need your income. All right. They create credit out of thin air using nothing but digital bookkeeping entries. And they extend credit this way. And if they can extend credit this way, they shouldn't be able to deny you unfairly. By using Regulation Z, 3-104, 15 U.S.C. 1691, you can challenge their system and put yourself in a stronger financial position so that you can be able to get credit, so that you can be able to get funding, so that you can be more in a position of taking these companies to task. Now that you know the truth, What are you going to do about it? If you've ever been denied a loan, please challenge them. Drop a comment below, and I want to hear your experience. And if you want more financial loopholes, credit secrets, and legal hacks, hit that subscribe button, turn on post notifications. I drop game like this every single week. All right? And essentially, if you want to learn more, down below I have a collection of links from links on discharging debt, links on negotiating debt collectors. But more importantly, I have a no-doc guide down below that gives you the actual funding code to be able to get no-doc loans. See, the thing is that, yes, you can actually go out there and get no-doc loans and things of that nature. But the best way to be able to get this is by building those banking relationships, communicating with those right people, so that and actually understanding the funding strategies and knowing which banks to actually go to, so that you can actually get the results that you want. For you to actually get the no-doc loans, you have to be willing to build that relationship and communicate with those banks. Okay, get in the room with those bank managers. Okay, actually try to speak to those higher ups so they know your name and know that you know your position in this economic system. Because if they know that you know, and you know that I know that you know what I know, then let's just conduct business. Let's make each other money. Because I know I'm making you money. I just want something out of that too. I want it to be fair. All right, I don't have to go and talk to everybody about our relationship, but maybe I can bring you some clients if I know you're not going to do them dirty like you just try to do me. And I guarantee you, those bank managers and those finance managers and those underwriters will remember who you are and say, you know what, this person is on to something. We'll go ahead. Yes, they're going to continue to take advantage of all the people who don't know the law. But the people who know the law, they know they can't take advantage of you. Because if they do, I'm going to challenge you for it. I'm going to sue you for it. Thank you guys once again. I love you, and I'll see you in the next video.